Relative Strength Index, RSI. Now, this is a momentum oscillator or an indicator that is used in technical analysis, and it measures the speed and change of price movements. Now, the RSI is displayed as a line graph that moves between two extremes, and it can have a reading from 0 to 100. That is, it oscillates between 0 and 100. Now, traditional interpretation and usage of the RSI are that values of 70 or above indicate that a stock is becoming overbought or overvalued and may be primed for a trend reversal or even a corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. Again, we do not need to calculate this or even need to know how to calculate this because all the charting platforms can provide this and layer onto your chart at your disposal anytime when you need it. Now the standard is to use 14 periods to calculate the initial RSI value. So by default, you'd see this when you add RSI in charts. So you'd see the 14-day RSI line when you look at daily charts. Again, depending on what time frame you do your trades, you can change the periods there to suit your trading style. Now, the RSI indicator can stay in the overbought region for extended periods while the stock is in an uptrend. The indicator may also remain in oversold territory for a long time when the stock is in a downtrend. Again, this can be confusing, but learning to use the indicator within the context of the prevailing trend will clarify these issues. The RSI is most useful in an oscillating market where the stock price is alternating between bullish and bearish movements. Now, some traders will consider it a buy signal if a stock's RSI reading moves below 30, based on the idea that the stock has been oversold and is therefore poised for a rebound. I will show an example of this once we get through this. However, the reliability of the signal will depend in part on the overall context. So if the stock is caught in a significant downtrend, then it might continue trading at an oversold level for quite some time, and the traders in that situation might delay buying until they see other confirmatory signals. Let's go through two examples that I have that I want to take you through. So over here, I pulled up the stock chart for gold. Again, it is oversold and with an increasing RSI. As you can see, the stock has been in a downtrend for a long time now. It's been beaten up, and you see this oversold here when it comes to the RSI, and it is also increasing. The RSI is increasing after oversold. This could again be a good entry point if you're looking at buying the stock. And you can also see the confirmation candlestick here, which is a positive candlestick, like the close was higher than the open. And as I mentioned earlier, the RSI is, the default is a 14-day RSI because this is a daily chart. So this is a 14-day RSI is at about 38.64, as you can see. So this is an example of an oversold, a stock with an oversold RSI, but it's increasing now, so it means that it's potentially reversing, or it could be a short bounce back to the upside. Going through another stock example, I have Eli Lilly. So this again, 14-day RSI is 65.54 here. This was in an overbought territory, but I can see a declining RSI. So here again, you could potentially go short. You can sell the stock short, and which is also confirmed by the two red candles that you see here. So it's again, it could be a pullback, but again, if you want a short, you can. But again, it's just a pullback. But here's also the example where you see that the stock was in an overbought territory for a long time. As it's been going up, it stayed in the overbought territory for a long time. So let's say if a trader, without knowing much about the RSI, thinks that it's more than 70, it's going to correct, it's going to pull back, he will be in trouble because the stock kept going up in an uptrend It stayed in the overbought territory for a long time before showing signs of a pullback. Here again, here it was slightly a shorter time. Then you see some pullback here, but then it started going back again in an over. I mean, in an uptrend. Now we can also play with the default values for RSI. I mentioned that it's the 14-day is the standard. I can even take a look at a 5-day RSI. Let's see what the story is. So with a 5-day RSI, you can see that it was in an oversold territory for a long time here. It almost fell to, what is that, 9 or 8 point something. Much below 30. And you could see that it stayed in oversold for a while before starting to bounce back. And likewise, on a 5-day RSI was overbought for a while the stock stayed in an uptrend. Here again, if you're looking at this, it's an extended period where it was overbought before you saw some signs of pullback. So again, these are two examples. One where I showcased the oversold with an increasing RSI, and Eli Lilly is overbought with a declining RSI.